Welcome to the Daily Market Recap. Today is Monday, June 1, 2026. We are kicking off the new month with some serious momentum. The bulls are running wild as the major indices pushed higher yet again, flirting with brand new all-time highs. The main engine behind today's Green Day, total AI madness, of course. Investors are shrugging off macroeconomic anxiety and pouring cash right back into growth assets. Taking a look at the sectors, technology and consumer discretionary are absolutely carrying the team on their backs today. We saw massive strength in chips and cloud-native systems, though energy faced a bumpy ride as oil prices fluctuated wildly on geopolitical headlines. Where does that leave the overall market vibe? CNN's Fear and Greed Index is sitting pretty at a reading of 60. That means we are firmly in greed territory, folks. Animal spirits are alive, kicking and driving this market forward.
Our biggest story today comes from none other than NVIDIA. CEO Jensen Huang announced a mind-blowing new chip designed specifically for the PC market. The goal? Bringing legacy machines directly into the AI era. This news sparked a massive rally across the tech sector, proving that NVIDIA is still the undisputed king of the artificial intelligence boom.
Next up, things are heating up overseas. Fresh military clashes in the Middle East disrupted what looked like solid progress toward a peace deal and the reopening of the Strait of Hormuz. WTI crude oil prices spiked right back up near $90 a barrel, injecting a sudden dose of energy inflation anxiety back into trading floors. Rounding out the top three, we got a fresh batch of economic data. May's ISM manufacturing PMI came in at 54.0, beating Wall Street expectations of 53.3. This proves that the underlying economy remains incredibly robust, even if it keeps the Federal Reserve on high alert regarding future interest rates. All right, let's dive into today's leaderboard to see which stocks won big and which ones got absolutely wrecked. Leading the charge into green territory, we have Hewlett-Packard Enterprise skyrocketing over 25% after hours on blockbuster results, followed closely by Microchip Technology, Dollar General bouncing back on value demand, and Broadcom keeping the semiconductor party alive. On the flip side, it was a rough session for these names. IDXX Laboratories led the downward slide, followed by ServiceNow hitting a major speed bump, Waters Corporation tumbling, and software giant Oracle giving back some of its recent gains. Time to talk charts. For our S&P 500 proxy SPY, the index is hovering near historic highs around 756. Keep a close eye on the 760 resistance level. If we break out above that, we are off to the races. On the downside, 750 is the key psychological support level to defend. Over in Techland, the QQQ is trading right around 738. Tech bulls want to see a decisive break above 745 to lock in the next major leg up. If a sudden sell-off triggers, look for strong institutional support to step in right around 730, and do not sleep on small caps. The IWM is resting around 288 after hitting record highs. 292 is the heavy overhead resistance cap to clear, while 284 is the immediate floor keeping this small cap rally intact. Switching over to the digital asset space, June is starting on a rocky note. The total crypto market cap dropped over 1% overnight, slipping to $2.54 trillion. Bitcoin lost its grip on $73,000, trading down at $72,700, while Ethereum shed over 2% to sit below $2,000. The big story here is a cocktail of geopolitical panic and institutional cool-off. Weekend strikes in the Middle East sparked a quick flight from risk assets, and May ended with over $118 million exiting Bitcoin ETFs. Investors are temporarily hitting the brakes as they evaluate these macro risks. Overall, the macro market sentiment remains overwhelmingly bullish, powered by raw AI optimism, though short-term caution is creeping in ahead of heavy labor market data dropping later this week. Keep your eyes peeled tomorrow for the JOLTS Job openings report. It is our first major clue before Friday's massive non-farm payrolls data, and it will give us the ultimate hint on what the Fed might do next. Trade safe, and we will see you tomorrow.